Hi guys, in this video we will be discussing about dual aspect principle and the historical cost principle. Dual aspect. This is the basic principle of accounting. According to this concept, every business transaction has dual effect, the giving aspect and the receiving aspect. This dual aspect ultimately brings change in the composition of assets and liabilities. That is, for every debit aspect, there is an equal and opposite credit aspect. See, according to this principle, there is a debit and equal in corresponding credit. That is, when you post a journal entry, you will have a debit and a credit, and this will ultimately lead into the change in the assets and liabilities of the company. For example, the proprietor introduced rupees 1000 to the business. Here, since the cash is introduced by the proprietor, capital has to increase, and the since it is introduced in the form of cash, the cash also has to increase. When assets increase, it's a debit aspect, and when liabilities increase, it's a credit aspect. So cash account debted to capital account. Now here you might not have understood or might have understood. Either way, it's fine. We will be doing problems regarding this. During the problems, we will be able to understand it more. Now I'm just giving you a brief of the theory part of accounts. Based on the dual aspect, we have developed an equation called the accounting equation. The accounting equation states that assets equal to liability plus capital. Again, if you take the capital to the left side, capital is equal to assets minus liability. When you take the liability to the left side, liability is equal to capital minus asset. Historical cost principle. The principle requires all transactions to be recorded in their acquisition cost. Acquisition cost is the cost at which the assets are purchased, including the expense incurred in bringing them to the intended location and making them ready to use. That is, if an asset is acquired, if a machinery is acquired at rupees 10,000, that cost of acquisition should be recorded in the books of accounts instead of recording the actual market value. The market value may vary from time to time. The market value might decrease or increase, but even after years, we use this 10,000 and we will be giving the ample amount of depreciation from year to year. We will not be considering the market value or the current price of the asset. Therefore, it is according to this principle that we take the historical or acquisition cost. Again, when I say acquisition cost, it is not only the price or the cost of the machinery or the asset, it is also the expenses incurred to make it ready to use. That is, if you purchase a machinery for 10,000, again you spend 1,000 for the transportation and 500 for installation and another 500 for your something else, and the actual cost of acquisition will turn up to be 10,000 plus 1,000 transportation plus 500 for installation and again 500 for the other expenses which you incurred. That is, like, your acquisition cost will be like 12,000 and not 10,000, which is the actual cost of acquisition. Reference: Accountancy 1 by P.K. Lazar.